many of these HOAs, they get these big increases and they go, well, what happened? We haven't turned in any losses, any claims ever. And then you have to go into the explanation of, well, it's not just you.
Hey everyone, this is Neo with the HOA Simplified Podcast, and welcome back. Today we're focusing on an essential topic for every HOAs out there, especially for Colorado HOAs, since Dalton is based in Colorado. We're going to be focusing on insurance, risk management, and really how associations can protect themselves against the rising costs, natural disasters, and the coverage gaps you see these days. So joining us is Dalton Spanbauer from Anderson Bond Insurance. Anderson Bond is a family-owned brokerage that's been advising Colorado HOAs for over 40 years. So Dalton, thank you for being here. And just to start us off, tell us a little bit more about yourself and Anderson Bond Insurance.
Yeah, thank you for having me. Thanks for the great introduction. My name is Dalton Spanbauer with Anderson Bond Insurance. As Neo said, we've been doing this for over 40 years in the Front Range of Colorado, specifically specializing in the HOA realm, condo, townhome, apartment, single family HOA, items like that. We're a medium-sized family-run business. So my dad, he's the primary. He's been doing it for 44 years, as well as another agent in our office, Rich Ban. And then all of their kids are involved in the business in some way, shape, or form. So Rich has his kids involved. And then on my side of the family, there's myself, my sister, then we have a couple other agents in the office. So we're a really tight run kind of community here at Anderson Band. Yeah.
I love it. I love it. And I mean, I guess this is maybe more of a question for your dad, but for you and your family in general, what kind of led you into the HOA insurance world?
Yeah. So when my dad first started, he wrote everything, you name it, just to get his feet wet in the insurance realm. And then what he found was that there was a real need for specialization within the insurance field in Colorado, specifically when it comes to the condos, townhomes, and HOAs. Mm-hmm. Just because there wasn't a lot of knowledge and expertise when he first started doing this. So when I got involved, he specifically said, hey, you can do any type, we have the capability of writing any type of insurance, which we do. But it behooves not only ourselves in the business, but it also helps our clients when we specialize in a specific realm of insurance, just because we tend to have more information about that specific niche in the marketplace, because it is a very unique market in Colorado, specifically when it comes to these associations.
Yeah. Absolutely. And yeah, I mean, I think having a niche and really focusing on something is very important. I mean, for us, we do HOA management, but we only focus on small HOAs. And you're really honing in on the Colorado market for the homeowners. Does being a part of a family business kind of differ in terms of the way you influence your relationships with your communities?
Oh yeah, I definitely think so, because when we're going to work with these companies, many times they've worked with my dad, and then they work with me or Kirby. So we're all kind of involved. My Kirby is my sister. We're all involved with just about everybody's accounts in the office. So you're going to see all of our names. So it's kind of a name that when people see it, they're like, oh, great, the Spanbauers are working on it. I've worked with them on this before and this before. So it kind of helps, in my experience, give some peace of mind, because you have not just one person, but you have a family dynamics. I've had so many managers who will, if for whatever reason, I'm traveling or whatever, they can't get a hold of me, they'll just get a hold of my sister or my dad, and vice versa. For whatever reason, they need something done immediately and they can't get a hold of, my dad or sister, they'll call me, and we're able to work seamlessly together. And that kind of brings us back to the whole family dynamic. We're very close. If you drive out of my driveway to my parents' house, it's a 60-second drive. Same with my sister. She lives 10 minutes away too. So we're all very close. We've been close, even growing up and then now too with the business too. So that really helps us kind of cover each other and then make sure we're giving the most to the people and the associations we work with.
Yeah, definitely. And I'm sure a lot of the HOAs will appreciate that like kind of family touch. Especially when it comes to insurance. There's the big insurance agencies, the big insurance brokers, but like being a part of a family business, I'm sure has a lot of advantages, especially.
Yeah. And that's the other thing was just kind of nice about our office, at least. Every aspect that an insured and people need from their agent, you're going to get one of us. Every single one of our office lines rings through to our cell phones. And no matter who's asking for something or needs help with something, whether it's a homeowner, board member, manager, whatever it may be, lenders, you're always going to get somebody in the office. Nothing is outsourced. Everything is within house. So you're always going to have somebody that you're going to call and be like, oh yeah, it's Dalton or Kirby or Mike or Steph or Justin. Somebody you'll know us. Right.
No, 100%. I want to kind of get into the Colorado specifics, just because, that is your specialty. But before we get into the Colorado market, let's just kind of run through the basics first, right? What are like the top, I know there's like top 5, top 6, maybe even 7, but what are some of the key insurance that HOAs really need to have covered to be protected?
Yeah, so there's some key lines that every association should have and needs to have. And I say 9.9 out of, I always say 9.9 because there's always the one, weird one-off that doesn't follow this rule. Within the association's governing documents, so they're legal documents, specifically the association's declarations, it'll state what coverages are required by law for the association to have. And usually it's property, general liability, D&O, fidelity. Sometimes they mandate umbrella. We always recommend umbrella, but sometimes it's not required. And then there's also a couple of other, I like to call them the underlying policies if we're not talking about the property, such as a volunteer workers' comp policy, a full workers' comp policy if an association has somebody that's a full paid time employee. So there's multiple lines to it. And the big ones that are going to be the most expensive for HOAs, for associations that have a good amount of property, it's going to be first usually their property insurance and then their general liability lines. So for the smaller HOA realms, you're mainly talking about your liability. So your general liability and your D&O. These are going to be your big 2-ticket items here. If they have, a clubhouse with a pool and like a playground, park, whatever that may be, the property line may end up being the biggest. But those are the main ones that we're looking for as far as coverages go. And we really try to make sure we do a thorough review. So we'll look at the governing documents. We'll look at we don't currently write it, what your expiring carrier had. And then we do a thorough submission to every applicable carrier that's going to write this, even if we know that they may decline. Because I would rather send it out to everybody and know I'm going to get declined rather than, it's most likely going to end up being this carrier, and we send it to that carrier and we get the quote. But then, after the fact, we find out another carrier that may have been better priced that we thought was going to be fine, changed some underwriting guidelines. So that's one of the fun games that we get to play every year. We no matter what, we just send it out to everybody just to make sure we're covering the bases, to try to get the broadest net to bring in as many carriers as we can.
Yeah, you're really honing in on, not only the HOAs being able to get multiple quotes, but that also helps them stay affordable, right?
Yes. Yeah.
Okay, awesome. And I think affordability is really the key. Colorado especially has been having skyrocketing premiums, right? A lot of prices have been increasing, and that may be just because of the region specific issues. A lot of weather changes in Colorado, but also throughout the country. I mean, even, here in California, the wildfires is definitely contributing to it, but also general like material cost increases.
Oh yeah.
Right?
Yeah.
Just inflation.
Yeah,
So
all of
tell
that
us a little bit more about that.
Yeah, so all of those items, they play a massive role because many times when we go out to associations to do board meetings, because we'll do in-person board meetings as much as we can, if the boards will, have us, of course. There's a ton of things that go into it that are driving rates, not only just here in Colorado, but nationwide. Over the past 2 years, we had some of the largest rate increases in a very, 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 very long time. And it was driven by what's going on locally in your area and state, but then also what's going on nationwide as well. So many of these HOAs, they get these big increases and they go, well, what happened? We haven't turned in any losses, any claims ever. And then you have to go into the explanation of, well, it's not just you. So first, what we look at, or not me, but what the carriers look at is what's going on locally in Colorado. Colorado is in the top 5 worst states to do insurance in the continental United States.
That's what I hear.
I think it goes like Florida, California.
I think California's up there. Yeah.
I think it's like Texas, and then Colorado's it could be intertwined, and then Louisiana. So Colorado is in this right here. I know Florida and California are 1 and 2. Colorado is one of these in here. And the reason for that is it's a beautiful state. There's a lot of amazing things out here. The wind and hail, specifically the hail exposure out here when you're in the front range off of the mountains is massive. And then the second you get into the foothills and into the mountains, the fire exposure, just like in California, it skyrockets. The hail, though, that is the biggest exposure here in Colorado. There have been massive, massive hail events that have taken place just over the past 5 years here in Colorado that have caused many carriers to completely change the underwriting guidelines or remove themselves from the marketplace in Colorado. So that's what's driving the premiums here in Colorado. But then you bring it on a nationwide scale. You look at all the hurricanes that came through Florida. The one that went through Florida, hit North Carolina, wiped Asheville, North Carolina off the map, right? Yeah. Billions in dollars of loss. And then you look at what just recently happened in January in California, that massive fire that came through.
Yeah.
All these carriers write in all these states. And anytime now you see a big natural disaster making nationwide news, everybody should just there's going to be a trickle down effect into the insurance marketplace, because these carriers are losing, billions of dollars in one instance. And the argument that I've been hearing a lot now is, well, the insurance industry, they're making record profits right now. And that may be true on a nationwide basis. They are not making record profits in Colorado. For example, and this could be higher now. Last time I checked, Travelers, one of the bigger carriers in Colorado, they were operating on a 3-to-1 loss ratio. So that means it's for every $1 of premium they collect, they're paying $3 out. We had an association that got hit with a hail claim. It was like a year or two ago. They had a $1.5 million deductible, which is a massive deductible. Yeah. But because of the nature of the wind and hail events in Colorado, their total in damages was $7 million. It was a massive association credit. But that just goes to show you, okay, association has to meet that $1.5 million deductible. But then the gap between 1.5 to 7 million, one carrier is having to pay that much money out on one single association, let alone all the other associations. So Colorado is a very tricky place to write insurance, just because the potential for loss from hail is massive, and then fire is also massive too. We had a massive fire event, I believe it was in December of 2022, the Marshall Fire just north of Denver. It was one of those freak, the wind was perfect, wildfire started, it destroyed entire communities in a matter of hours, just like in California. Fire that went through in January, in a matter of hours, and it just wiped out millions and millions and millions and millions of dollars worth of property for people, and it directly affected what happened with the rates in Colorado.
Yeah. Yeah. I mean, I hear that all the time as well. Just like insurance, just pulling out of California, right? Just like not even
Oh yeah,
wanting to cover California
yeah.
anymore.
Oh yeah,
How
tons of carriers have done that.
and I also hear that, especially well in California and maybe in Colorado as well, you can tell me more. Are there any like legal changes that affect this as well?
Um, it they've been talking about stuff, but it's been they can't really figure out how to make it work quite yet in
Hmm.
Colorado. So they have in California, they have a program. Um, it's a government backed program for associations that
Yeah.
cannot either get insurance or afford insurance, and it's been around there since I want to say like the 70s or 80s. The issue with it that we've seen and been told is that an extremely small percentage of associations actually qualify for it.
Right.
So whether it be financially or size wise or whatever it is, and they're trying to bring that here to Colorado. They've been trying to do something like that here for, man, I want to say the past 3 years, and they were going to start in the mountains, but they can't figure out, and I like to say, how to make the math
Yeah.
because the carriers that are currently writing here, they have their finger on the pulse of, okay, we need to be at this price to ensure we are getting not only adequate coverage but adequate premiums to make sure we're not getting blown out of the water,
Yeah.
because 2023 hit, and that's when all the carriers in Colorado started pulling out because carriers are priced down here when they should have been priced, way up here, and they
Uh,
lost their shorts.
yeah.
So the issue, they're working on it. No idea where the progress is. And the few meetings that I did listen in on, it's just back and forth of trying to figure out how to make it work.
Hmm.
So as of right now, there's nothing formally happening from a larger government standpoint here in Colorado, just
Hmm.
because they can't figure out how to make it work quite yet. That's just what I've been hearing and have been told.
I see. That's interesting.
Mhm.
Yeah, I mean, with a lot of these like major carriers pulling out of Colorado, California, and states, you know, in 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 the eyes of like the broker, right? For your company, how do you kind of work with HOAs with these
Yeah.
tightening market as well as, non-renewable policies?
Yeah. So the nice part about the type of agency we are is we're an independent brokerage. So what that means is we have um, direct contracts and then indirect contracts by going through multiple brokerages to get to just about every single carrier that's going to write this type of business in the state. So you have your captive agencies that can only write on their own paper,
Hmm.
but that's not what we are or how we can do things. We can literally, for every single line of insurance, plug and play. And so we do this. We send it out to every carrier for every single line that's going to get it the best possible option. So you may have, for example, let's say you have travelers on the property and general liability one year, then you have distinguished programs on the D&O, Kevin Davis travelers on the Fidelity, and then
Hmm.
Greenwich on the umbrella one year. The following year, every single one of those lines could be a different carrier, because what we do is we send it out to everybody for every single line
Oh
to
wow.
try and really, 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 really get the best possible option for you guys. So we have access to tons and tons of carriers. We can go locally, nationwide, then also overseas as well. We'll go to London and then to Japan if we need to get options
Really?
that are not only offering the most coverage, but then
Uh-huh.
also, and I put air quotes around this because it's Colorado and the premiums
Uh-huh.
are nuts, affordable.
Right.
Because there's only so much that we can do. And right now, fortunately, Colorado, for at least until through December, the marketplace is stabilized. So we've been
Hmm.
seeing flat um, rates or slight decreases depending on the association. Now, there are obviously a couple outliers that maybe their valuations increase from last year, causing a premium increase because, more value, more premiums. But for the most part, the market's been pretty stable. And even with us sending it out to multiple carriers, we're still getting some good options for this year. We're kind of coming out of the dark tunnel where that was 23 and 24. There's still a couple of associations that are getting hit now just because they didn't get hit in 23 and 24. But for the most part, we're coming out into the light. That's a comfortable market in Colorado.
Yeah, yeah. So obviously for our viewers in Colorado, they have a great option sitting right in front of me, right? But for our viewers that are, perhaps not in Colorado, maybe they're self-managed communities that don't have access to an independent insurance broker like yourself. What should HOA boards really consider when they're doing insurance shopping, especially in this environment?
So the big thing is, I guess my recommendation would be, and this is going to be the tricky part, is finding a broker that has access to a lot of different carriers. So how the market works, it's on a first come, first serve basis. So if I was not on this side of it, I'd probably do what 99% of boards do, is they go, okay, we need to try to get as many possible options as we can. So we need to go to as many different agents as we can. What you're actually doing is shooting yourself in the foot, because what happens is agents end up blocking each other. So agent A may get the best price property carrier, but agent B may get the best price general liability carrier. So then agent A can't get you the best possible options. What my recommendation would be to these boards is meeting with your broker and saying, hey, are you going out to the entire marketplace, making sure you're covering everybody so that we have multiple options? Many times what we see is you'll get from other agents who may not submit to the entire marketplace, you get, here's your expiring, here's your renewal, and that's it. I hate seeing that, and we don't ever do that, because like giving them expiring, here's your option, you're pushing them into a corner. No way out. So finding an agent that can meet all those needs and get to the entire marketplace is very, very big, and will help associations out a lot. And it's just asking those questions up front before you start sending this to multiple agents, because then it's just, like I said, it's going to make it difficult for any of those agents to really get you the best possible option. So doing a formal interview process is always extremely helpful. So then you can kind of get a feel for what this agent or your agent may be able to do for you and is capable of, and then set expectations early, so that everybody can be in the best possible spot when the renewals come around.
Yeah. And my guess is that doing that independently is extremely
difficult. Yeah.
Almost impossible, right? I mean, you just need to know the right people, have that right connection, and that's.
Yep. Yeah, you do. And for what happens when these associations that are self-managed and they don't have managers that have these contacts, they have no way of finding a contact unless they're literally calling every single agent that they look up on the internet to see what they can get. So by having a management company, that does help a lot as well. Even if it's a really small HOA. And that's what, when we first started talking, that's what I found was so interesting, is in what could be extremely helpful to the associations you work with nationwide, is you guys are providing, hey, we can give you some management expertise remote, and then we also have some contacts for you to utilize. So it really behooves the HOAs who either are self-managed, or if they're not happy with their current management company, to at least come and talk to you guys to see what they can do.
No, absolutely. One thing that I did want to touch on, and I think, when I talk to a lot of my, HOAs and board members, especially when they come from like self-managed backgrounds, like directors and officers, we're just an HOA, right? Or like umbrella liability, like what is that, right? So like these are topics that, some HOAs may be very familiar with, but some just simply, it just it's just very challenging to kind of really understand. So how do you explain these very I don't want to say complicated, but potentially a little difficult to understand coverage terms to board members that really sticks to them?
Yeah. So property, that's pretty straightforward. It's any property that the association is responsible for. That's what you have to insure. The liability lines is where you're going to start to see more of the questions pop up like you're talking. So the first one is your general liability. That's going to end up being most likely one of the bigger ticket items on top of the D&O coverage, which I'll talk about in a moment here. So the general liability coverage, I like to call it your slip and fall or trip and fall coverage, because that's the most common claim that we see from it. It is, example would be, let's say somebody is, walking their dog in a snowstorm, which people love to do in Colorado here. And then they slip and fall on association maintained property, and they come back and say, hey, I got injured. We need to turn in a claim because it's on association property. And then you turn it into the general liability carrier, and it helps cover bodily injury claims on association property if found liable. The other big one is your directors and officers. So that's going to cover your board. It covers the carriers that we use. It covers past, present, future board members, estates, spouses, trust. And what this covers is it covers the board of directors. And the most common claim that we see is enforcement of rules. So for example, let's say a homeowner has, something in their yard, whether it's a yard decoration or, just a bunch of, let's say they have a bunch of broken down cars parked in their front yard, right? And the board goes, hey, per our, covenants or declarations or whatever, you can't have that here. The owner disagrees, and then a lawsuit comes out of it. That was an example. I'm not saying that's exactly what would happen, but something along those lines is what D&O coverage is for, so that it's the association's policy covering these board members, and these board members aren't individually liable for something that, happens while they're working on behalf of the association as the board of directors. And then your umbrella policy covers over the top of all your liability lines. So over your GL and your D&O, and then your volunteer workers comp policy, which we always recommend for HOAs, condos, townhomes, which I'll talk about in a minute here. All this does is it adds significant layers in coverage to those line items. And I have seen in many cases the umbrellas get tapped in on the general liability and the D&O, just because. So for example, we had a gentleman have a traumatic brain injury, slip and fall, trip and fall, hit their head, right?
Oh boy.
Flew through the underlying general liability policies and tapped into the umbrella. And why we always recommend an umbrella rather than adding, let's add a few $1 million to the general liability policy here and the D&O policy here, is by adding to both those policies, it ends up being way more than if you were just to get one umbrella policy that covers over the top of those policies right here. It's just a much more cost-effective option. And then the last liability item that we always recommend HOAs have is your volunteer workers' comp policy. So it's going to cover a couple of things here. It'll cover anybody doing work on behalf, the keyword is behalf, of the board of directors. One example I like to give is, let's say there's a community garden and they're doing some gardening on behalf of the association. They get injured some way, shape, or form. It would help pick that up. The other big one that we see it can help pick up is any contractors who may have either don't have insurance or their insurance is lapsed, is working on behalf of the association on association property. So this example I could give is, let's say you have a snowplow company, right, that comes through and plows. And in order to get the contract with associations and management companies, these contractors come and go, look, here's my certificate of insurance saying, hey, look, I have insurance. Great.
Right.
The management company then files that. And then that's it, right? They have no way of knowing of, okay, is the coverage still in place or what's going on? Because sometimes what we find is maybe they miss an insurance payment and their coverage is lapsed and they don't know it. Or in the rare case that we have seen, a contractor will go, look, here's my certificate of insurance. They'll get the contract. Next day, they'll cancel their policy, which is ridiculous to me, just in order to get the contract. They don't want to pay for the insurance policy because it's expensive to cover liability for those, lawn snow maintenance. I'm not saying this is the case for everybody, but this is that's an extreme example. This volunteer workers' comp policy would help cover that in the event of something happening. And this line item, it is with the carrier that we use, it's $1 million in coverage. It costs $352 annual premium. It's one of the most cost-effective coverages in the marketplace right now. And I always highly recommend it because, that's what insurance is for. It's for the this just happened factor,
Yeah.
You could not have anything like that happen at an association for 20 years. And then all it takes is one little pop and it just bankrupts an association if they don't have proper coverages. And that's one of the things that we really try hard to do is reviewing the documents, and then also exposure itself. We always make sure to go out and do a physical walk just to see, hey, what are we working with out here? See, like, okay, what could potentially cause some issues here for the carriers? And then what are some recommendations that we may have to come back to the association to make themselves look better on paper for these carriers? And that workers' comp policy, the volunteer workers' comp policy, is always something that we try to recommend every single time, regardless of the size of the HOA.
So for this extreme case, this is very interesting. So for this extreme case that you mentioned, where like the worker or the contractor shows the insurance policy, either cancels it or just like it wasn't like renewed or whatnot.
Yeah.
The HOAs. So then in that case, if something happens to that worker, the HOA will be liable.
So if they were to be liable, so that's
If
the big
they were to be liable.
because so the legal system it's tricky, right?
Very yes.
So just because you may have an association may have done everything they possibly could to negate a claim or an issue, it doesn't mean that it's going to stop it entirely. And even if they have been as proactive as possible, we have seen cases where, like for example, let's go with like a slip and fall one, right? Most associations in Colorado, they'll have a 2-inch trigger to trigger the snow maintenance people to come out and clean up the snow, right?
Mm-hmm.
So if it's 2 inches or under, no one's coming out to do that shoveling or plowing. So that's usually where we see the claims happen, is even though the association is being proactive about putting measures in place to try to negate those claims, something still could happen,
right,
where they may be found liable, even if they've done everything that they possibly can to negate that exposure. So it's just another layer on top of all the other layers that we try to throw in there to negate as much possible financial burden on the association if they were to be sued or something, rather than having to pay out of pocket for these the claims, the slip and falls, the property claims too. They have adequate coverage through the insurance lines that we get for them, so that it's the carrier's covering it and you're just paying the premiums, rather than, oh man, we got sued for $10 million, right? What do we do?
Yeah. No, definitely. And like that slip and fall in Colorado, because there's a lot of snow, it's slip and fall. In California, I think it's more trip and fall.
Oh yeah.
With the trip hazards and whatnot, and
we
that's
see that
why
a lot here too. There'll be a one little crack in the sidewalk and someone catches their big toe on it and goes down and breaks bones.
No, and it can happen. And
it happens all the time. All the time. We see it all the time.
So like slip and fall, or trip and fall. You mentioned hail. What are some other like common claims that you see either in Colorado or just like in the space that you're in?
Yeah. So besides that, like I said, the big two are going to be your property claims on the associations that have a lot of property, and the big thing is going to be hail. And then you're going to have your liability claims on the GL, sometimes the D&O, just enforcement rules. But these are the two big ones. The other claims that we may see pop up is like water losses, because, and this is if they're responsible for property items, specifically on like condos, townhomes. If you have a unit that has a water leak or a pipe break and it trickles down through, 3 floors down of units, that adds up really quickly. But as far as for the the smaller just HOA communities, the biggest things we're seeing is liability. It's going to be your general liability and your directors and officers liability. It's going to be those types of claims. So the trip and falls, slip and falls, and then just the people disagreeing and the board getting sued. Those are the big ones that we see for the smaller associations, specifically the single families. Usually there's nothing too bad. I don't know what's going on right now. There's something in the water in Colorado, but I've turned in the past 2 weeks, I think 6 D&O claims for just weird enforcement of rules stuff. And I'm like, well, that's odd. Usually it's going to end up being your general liability on the HOAs that takes, if you're going to get any losses, that's usually where the losses end up happening.
I see. And I know you mentioned property walks, which is very interesting because just from my knowledge, not too many insurance brokers do that.
No,
How does that kind of help with both, your understanding of the HOA, but also the coverage that the HOA can really get?
Yeah. So, and this is one of the principles my dad taught me, because he always did this, is he would go out and take a look at these properties. And that's what we all do now, because what we found is you can only get so much information from, paper and then Google Earth looking down. Good example that I like to give on this one. When my sister was going through her insurance schooling, an instructor said how you find the information is you go online, you look at listings, aerial views, you get the square footages from online, and then that's how you submit it. And then my sister's like, well, my dad and brother, they go out and inspect the property themselves. And the instructor tried telling her, well, that's a waste of time. That doesn't help. But then she came back with this example. I had an association that the carrier was arguing with me that you have this listed as sprinklered on the inside. It was a condo association. And we don't think it is. And they were like, so we're increasing premiums by $10,000. And I was like, no, because I went out and took a look around, and I take a couple pictures of some, pertinent things, or something pops out. I'll take a picture of it just so I have it for our file. And I had pictures of the sprinkler heads inside the units, and they go, oh, you are right. So, and then they took that off. For the small HOAs, what we found is that there are sometimes like playgrounds and stuff that are out there that you can't see from the air. They're covered by trees, or you just don't catch them. If you go out and just take a quick little drive around, look around, and you see those items, then we can make sure that we're not missing anything. So we really try to do our best to do a very comprehensive review before we even send it out to the marketplace. So we'll do the internet searches, from the air, online searches, pulling up addresses, just taking a look, and then gathering the information from either the board or the management company. But then we always like to go out and just do a quick little, sometimes it's like 30 minutes. If it's a big association, sometimes it's like 5 minutes, and you just slowly kind of drive through and look around, like with these single family HOAs that don't have a lot of stuff out there. All you got to do is just take a quick little drive around and be like, oh, there's some community mailboxes. That may be something we need to add to the policy. So it helps us gather more information to go back and confirm with not only the management company and the board, but then also the legal documents as well. Because at the end of the day, when you come to us for insurance, the people we work with, they want to have the coverages that they need, so that if something happens and it comes back and goes, oh, you don't have coverage for this item, they're sitting there going, well, what are we paying for? So we really try to do our best to be extremely proactive about really reviewing everything extremely thoroughly, so that we have everything that needs to be on the policy. Yeah.
No, and what's really interesting is that whole process that you just mentioned kind of sounds like a process that a adjuster would do. Right?
Yeah,
and
exactly.
So my next question is, do you support boards during the claims process as well? Say something does happen, and kind of walk me through that.
Yeah. So how the claims process goes is, let's say Association A, management company, they come to me and go, hey, we have to turn in a claim for, X, Y, and Z. And I go, okay, got it. I submit it to the carrier. Then the carrier, from that point on, usually works just with the management company and or board. And they do not keep me in the loop. And that's one thing that I don't really like very much, because there's been many times where months will go by, and then I get an email from the board saying, hey, we haven't heard anything on this claim. And I'm like, okay, why? So what we've been doing now is when a claim occurs, we turn it into the carriers, obviously, but then I'll go back to the board and the managers and explain exactly what I just said. Hey, they don't really include us in the claims process. But if for whatever reason you are not getting a hold of somebody, or the carrier's not getting back to you, or the adjuster's not getting back to you, let me know. Because for some reason, when these boards and management companies could say and ask the same things that I am, but when they see the agent pop up in their inbox or a voicemail from them, 9.9, because there's always that one weird example, out of 10 times, I immediately will get a response, and then we can get things moving. We've had many cases where there's been associations that had losses that we weren't the agent on it at the time of loss. And then we kind of explained, here, this is what we can try to do to help you. And we've helped get the claims moving. We can't close claims. We can't, I have no authority or decision-making process in that. That's on the carrier and the adjuster. Of course. Agents don't have the ability to do that, but we do have the ability to start, poking people a little bit, be like, hey, they haven't heard from you. What's going on? To get the ball rolling. We've had many associations move over to us because they didn't have that one little thing that helps them get through the process. So a lot of what we do, I guess the biggest philosophy that our office is, how would you want to be treated and how would you want to be handled in these scenarios, right? I would want to, if I'm not hearing anything, I would want to be able to reach out to somebody like, hey, can you figure this out? And they go, yeah, I got you. And then within 24 hours, they have a response. It's just being, to me, it feels like common sense, how we operate and do things. Like I said, all of our office lines ring through to our cell phones. We will always get back to you within 24 hours. Things like that. That's the biggest thing that it's a service.
Right. No, absolutely.
Aspect that I think is very, very underutilized in this realm of insurance, especially in Colorado. Just by doing one little extra step, it helps so much with getting these claims rolling or in the process of trying to get paid out and closed. Just doing little itty bitty things like that helps so much, and it goes a long way, rather than saying, oh, I have nothing to do with that. The carrier's on that. They'll reach out to you, not assisting in any way. That doesn't make sense to me,
Yeah, 100%. Yeah, wow. It seems like you guys are really taking that step ahead, right? Like just like going through the extra mile.
We're trying to be as proactive as we can to help as many people in boards, because these boards and managers, they're at the end of the day, they're people. They don't know everything, just like I don't know everything, but I know insurance enough to be helpful, right? I'm always growing and learning. I don't know everything, but if I don't know the answer, I can find it for you.
No, like everything that we talked about, I'm sure would be extremely helpful. I don't even think not only to just Colorado HOAs, but just nationwide, right? Because like these things are difficult. These things are, very nuanced, and you need to have someone like, in HOA management, I can answer some questions, but sometimes with insurance, I don't have all the answers, right? So like it's just so good to have these types of conversations. Any upcoming, trends, any market shifts that you see, new services that's coming out on your end that people should be catching on?
Yeah, so the market is in Colorado, it's always in fluctuation. Who's in the marketplace, who's not. Many carriers are pulling out right now, while there's some pulling into the marketplace as well. The big thing is for this year, I'll start with the bigger items. So the condos, townhomes. If you're not seeing your premium stay kind of flat, if not slightly decrease, one of two things is happening. The first could be maybe you had a valuation increase imposed by the carriers to stay compliant with governing documents and cost of rebuild in Colorado. That I could see it makes sense. But if you're staying roughly same values, but you're not seeing rates stay flat or go down, you're seeing these massive increases outside of what I said for valuation increases, something is not right. because of what we've just been seeing currently in the marketplace. I think this trend will continue to December. I do not know what will happen after January. So the condo townhome realm, it's stabilized. With the single family HOA marketplace, that is now, so 23, 24 for the condo townhomes, that was rough. And the HOAs were nice and stable. Now it's starting to trickle down to the HOAs, and we're starting to see the trickle down effect from all these big carriers that are writing the condo townhomes. They also write single family HOAs and the smaller associations. They write everything. So now we're starting to see it affect those associations. And if you're not getting multiple options on your renewal, that's something I would also look out for as well, because the increases we're seeing, granted, the premiums are significantly smaller than the condo townhomes, but if you have, let's say a 25 home HOA and the premiums go from $5,000 to $10,000, that's a double.
That's 2x.
Doubling the dues for everyone, for single family homes that, the association may only be responsible for common area stuff. So we're at the point with the single families where it feels very much like it did with the condo townhomes about a year to 2 years ago.
Okay. Dalton, I think we definitely covered a lot of things today. Very comprehensive, just went through from A to Z on insurance, especially in Colorado. If you have just one key message, just one last thing you just want to, let HOA boards know in terms of navigating insurance, what would that be?
Ask the questions, no matter how silly it may seem, because the insurance, and that I get this a lot, is some boards, they'll be like, well, I thought I knew what it was, and then I explain it to them, and it's complete opposite understanding of it, just because it's complicated. There's a lot that goes into this type of insurance, and it's very different from health insurance or car insurance or whatever it may be. There are things that the average person is definitely not going to know. So by asking your broker or me these questions, we're able to get you the answers that you need to help these boards make the best educated decision moving forward for coverages and financially for the association, because that's what it comes down to at the end of the day, is the costs, because
absolutely
insurance is usually the biggest line item for HOAs, and it directly correlates and impacts how much people are going to have to pay on a monthly basis for their HOA dues.
Absolutely. Wow. Dalton, thank you so much for joining us again to the HOA Simplified podcast. And to our listeners, you heard it here first. Stay informed, stay proactive, ask questions, stay curious. And, if you're a HOA in Colorado, in need of insurance, Dalton is right here, Anderson Bond Insurance. And thank you so much for listening again. And we'll see you next time. Thank you, Dalton.
Thank you for having me.